Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your weekend edition of your agriculture update, and this is for Friday, the 8th of June, 2018, just after 1:30 p.m. Central Daylight Time. G7 meeting going on right now. The importance of that is you know that all the members of the G8, well, G7, it used to be G8 with Russia, now it's G7, are ganging up on President Trump, saying that this America First doesn't give them any rights, it takes away, and then he's going to be saying, you know, you've had the best deals you've had going for decades, other presidents should have done something, you've got to come to the table with something, and that's what we're going to hear, and then he's going to be able to, luckily, get out of there early because he's got to go prepare for North Korea. So we'll see what it does, but you're not getting much of a bounce in the beans. Now, what's today's day, the 8th? We haven't heard anything from China as to is there anything better going on the deal. If not, I'm going to be looking for more tariffs on goods, 50 billion more in China, and then we'll see what they do to us with the tariffs. So this will be the interesting week. Are there any breakthroughs? Does anyone get through to the president at the G7? And does China do anything? All happening at once. I would say that China and the president won't do a darn thing in talks of trade until after the 12th. Let North Korea get out of the way first. Then we'll find out what happens there. And, of course, on the 13th and 14th of this week, we have the FOMC meeting. You got your hands full. Bean market looking weak. Wheat was down a little today, but it's had a nice run because of the bad weather in the southern plains and in the Black Sea. And the corn market pretty stable, if you will. Energy prices down a little bit today. But as I said, this is our weekly version of what we do. So let's take a look and see what we've got right here. And if you take a look at everything that we're doing, this is a monthly bar chart, and I think you'd agree. This market's gone sideways for a month. If you're a farmer and you're just watching this chart, you have been caught roughly between $9 and $10.71 since 2017 to 18. It has fallen back and been very much in the center of those two prices. That's where you're at. You can't get away from it. When we look at a weekly bar chart, everything started falling apart this week, and it's falling apart because we're making what we see is not enough headway with China. What they want to do, how much they want to buy, not signing timetables, not giving us target numbers that they'll do. Under this president, not going to fly. It's not going to be, hey, we'll trust you. We know you'll buy more when you can. That's not going to work. And that's broken the market down that I think you can see. And now you've got a pattern of lower highs and lower lows. So when we look at this market for the week, you're down 52 cents. And that's a big break out of this sideways action. When we look at the 100-week average of closes at 990, we're well under that by 21 cents, so that's not offering the support at this point. If the market drops further, the lower Bollinger Band was 969 and a quarter, and we're closing literally right there, right? Well, actually 977 and a half is the number. So we're under the Bollinger Band. I read that wrong. We are under the 100-day average. Is this a breakout to the downside? And the answer is, let's see what momentum's doing. Momentum is still pointing down but oversold. So my answer is momentum says the market is still pointing downward, not even trying to turn back up. The price is in a downtrend. The bias is down. The word is you're out of the Bollinger Band. You often stay within them, so you might exceed it a little bit. You're probably going to try your best to stay in those Bollinger Bands, but you have a downtrend with two levels of resistance, 990, the 100-week average, and then again 1026. When you come to the meal market, you have the pattern of lower highs, lower lows. bearish. The market's under the 18-day average of closes, bearish. Momentum is down, not embedded, or in weekly charts, I don't look for embedded. I just look to be sure it's staying down, and it is staying down. The next target, as I have it, is 350, 370, which is the lower Bollinger Band. We missed it by $2 this week. In the soybean oil, the trend, lower highs, lower lows, down to the lower Bollinger Band, found support, resistance, the 18-day average, momentum down. There's a common theme here. Everything's bearish in the grain complex. So far, everything we've looked at. Corn market. The corn market isn't quite as bearish as the soybeans. We had a rally that just faltered this past week. So now you have a higher high and a lower low. That is neutral. Prices did close underneath the 18-day average. That's a bearish bias. Momentum is pointing down. If the market wants to accelerate, the combination of 360.5 and 358.75, the 100-day average of closes on the corn, could be the support zone. The resistance is right now the 383.75. In the wheat market, this has been the strongest of the grains. And it's the strongest because we're getting bad results out of the southern plains as we're harvesting there. And the Black Sea region has 10 days of really hot weather. And remember, Russia is a major world competitor on that. So that gave the market a little bit of a bid. So we have a pattern here of higher lows, higher highs. That's bullish. The market is over the 18-day average. That's upside bias. That's bullish. And momentum is still pointing up. This is still very much a bull market with support back here at the 485.25 zone, resistance the upper Bollinger Bands. In the cocoa market, you're down to a point where now the market gets interesting. You've come straight down from 29.58, 7 cents to the 100-day average of closes. And suddenly the market found its footing against that. In the process, you have a higher high and a lower low. This is what you call a vertical price drop. You don't even get a chance in something like this. You either jumped on board or it's gone from you. Will it go to the lower Bollinger Band? It certainly can. That number, because momentum's still dropping, could be 2060. Could the market be trying to find support at the 100-day average and fight a battle to get back to the 18 as resistance? Yes, it can. The hardest thing is because it's a vertical price decline. That's always a hard market to play with. In the sugar market, it's going to get exciting. Yesterday, the sugar market had a big reversal down. Now, this is a weekly chart. But you still in an uptrend because you got higher lows, higher highs. You settled yesterday at 12.52 over the 18-day average of closes. Bullish. Today the market drops back down and comes rocking back up right at the close to 12.25. It closed under the 18-day average. So here's what you've got. You lost your bias to the upside because you closed under the 18-week average of closes. The swing line is up, which is bullish, and momentum is up. I would think if the market clears last week's high, and that number here is 1297, you're on your way to the upper Bollinger Band potentially. So interesting chart pattern. A stall today on the daily charts, very volatile the past 2 days, but the longer-term picture, still friendly. In the coffee, this is a market with a lower low, a higher high, caught in between the Bollinger Bands, these black dashed lines, and just narrowing itself in. From this type of play comes big-time moves. What's happening is the market is spinning right now, not able to carry a trend up, not able to carry it down, and the Bollinger Bands are defining the boundaries of support and resistance at this point. Momentum is flat, bias is down, and there is no trend. In the cotton market, you are still very much in a market that is trying to thrust to the upside. It's got a higher high, but a lower low pattern. That's not a trend. It is paying attention to the Bollinger Band. Looks today as though it's going to close over that band and try to stay strong, and momentum is locked in. Nothing bearish on this chart to talk about. In the cattle market, you have all of a sudden gotten way down here a bullish pattern. Higher lows, higher highs on the weekly chart. Momentum is just flat right now. You are under the 18 and the 100-day average of closes. Now, there's going to be a negative, I think, that happens this week. These numbers are very close. You could easily get the 18 under the 100 day, which typically is bearish if prices are below them. So we have to wait and see what that does. Let's assume it doesn't turn right away. Even if you rally to them, there are two numbers waiting for resistance. And to get bullish, you have to be over both. So I can call that you're going to get a market that can rally here, but I can't call it a bullish market rally. In the lean hogs, still bullish. Higher lows, higher highs. Now, the hog market's caught a lot of people this week. You know, Mexico's our largest importer of U.S. hogs. They already have a tariff on U.S. hogs, and they're doubling it. That will hurt down the road. No questions about it. But is it hurting right now? So the market is looking how things are going. July 1st, we have the Mexican elections. Depends who they're going to pick as president. If they're picking who's leading in the poll, it's very seriously in jeopardy that we'll ever have a NAFTA deal. Nothing that I see on the horizon. So that's something to get in line with the way that the polls are lining up. We will see resistance back up at 83.32. You know, one of the things I love to do is teach something new. And what I did is 6 months ago, I started bringing out pivot points. 2 days ago, I gave you another chapter in it. Let me show you what this is. Pivot points are a formula that give you a center line and from it 2 sell points above the market, 2 buy points below it. But what I found is if you mix with it momentum, and that's what this is right here, the momentum helps you pick your sell and buy points and shows you the timing of them. There are 3 videos now. There used to be 2. I teach you the formula. I show you how to work with it. I teach you how to put it on your charting software. If your charting software won't do it, ours will for sure. And then with this video, you start learning the timing and you can go on to any market you want. How do you get it? And it is free. All you need to do is go to our website at www.iraepstein.com. You'll see our carousel of free offers. Sign up for the pivot points. That's the way to do it. You can click up here if you're watching me on YouTube or underneath us on many websites. It says, click here for Ira's free information. I'm Ira Epstein. You have a great weekend. I look forward to seeing you on Monday.